why is Robinhood able to offer services that seem too good to be true? The first reason is the company doesn't need to make money. They're a venture-backed company. In fact, just 2 years ago, Robinhood raised $110 million at a $1.3 billion valuation when they had 2 million users. Then, in mid-2018, they raised another $363 million at a $5.6 billion valuation, announcing they had about 4 million users. So Robinhood, their business model is basically being subsidized by venture capitalists. But let's not get confused. They are making money and generating revenue. Bloomberg came out with this sort of bombshell report in October of 2018 that said Robinhood gets almost half of its revenue in controversial bargain with high-speed traders. And this was basically a huge expose saying that Robinhood is actually getting paid. Every time you place an order that is free, that costs you $0 on Robinhood, Robinhood is routing that order to a massive market-making high-frequency trading firm, namely Sigma and Citadel are their largest customers. These are two multi-billion mega New York big money hedge funds that are paying Robinhoods to get access to your orders. Now, why would they do this? A little bit more on that later, but first I want to touch into how much they're actually getting paid, because at first it doesn't seem like that big of a deal. So Robinhood claims, according to this report they put out to basically clear up how they're making money, a letter from the CEO, when you buy or sell stocks on Robinhood, like many other brokerages, they try and make it not seem bad, we send your orders to market makers like Two Sigma, Citadel, and Virtue instead of exchanges like that New York Stock Exchange. Market makers don't front run your orders. They're actually required by regulation to execute your order at the best price among all exchanges, and unlike exchanges, they don't charge fees. So Robinhood is like, look, okay, so we are getting paid a little bit of money to send your order to some random hedge fund. Now, why is this bad? And yes, there are other brokerages like E-Trade, TD Ameritrade, and Charles Schwab do this, but other brokerages like the one I use, Vanguard, doesn't do this. And I think this is super sketchy, and this is the weirdest part of their business model that, according to Bloomberg, is generating half their revenue. So they are getting paid, on average, according to this post, 0.00026 in rebates per dollar traded. That means if you trade a stock for $100, Robinhood earns about 2.6 cents to sell that order to someone else. And you might be saying like, oh, okay, whatever. So let's say I placed an order for $500. Okay, I paid about 13 cents in fees for that trade. That's nothing. That's still way less than E-Trade. I think it's a little bit sketchy that they've been selling your order, that they're marketing orders as free and then selling it. But that's only half the equation. The other half of the equation is what happens with that order when it gets executed. Like they said, they're not running it through an exchange. They're selling it to someone who's paid to access that order. Why would someone pay to get your order from Robinhood? Right? Probably because they're going to make even more money from it than what they're paying. And that's exactly what's happening. Citadel, Two Sigma run these massive dark pools, which are essentially off the record exchanges, which they then facilitate trades. So if you could imagine what's happening at a super high level, your trade is like this incredibly low lobbing pass that everyone can see coming from miles and miles away. And Robinhood has sold the right for who gets to execute this trade to essentially the highest bidder among the high frequency trading firms. And so those high frequency trading firms then take this lobbing order and can mismatch it. Let's say the market price is really here, but you're willing to buy it up here. They can buy the stock here and sell it to you here and keep that difference. And so by aggregating a ton of orders and seeing when they're coming in and being able to move faster than those orders, they're able to profit. And essentially what's happening is your order is not getting executed at the fair market price. So even though you're putting in a market order to execute at the market price, you're not executing at the market price because you're getting your orders being rerouted through a dark pool, which is paying for the access to get that order routed so that they can do it for something not the market price and then keep that difference between whatever they paid for the order and the actual market price. So I don't know if that makes sense. And for those of you who want to learn more about this, please, I cannot encourage enough you to read Flash Boys. This is the book by Michael Lewis that goes on the entire high frequency trading industry, how this works, this entire, essentially he took off the curtain of this behind the scenes of Wall Street of how everybody's paying the highest bidder to route your orders so they can make money on it. So even though you're not paying, you're paying $0 to buy that stock, what really ends up happening is instead of buying Tesla at the fair market price of $330, let's say, you'll actually get executed at $333 per share, let's say, because that high frequency trading firm is routing it through a dark pool. And you may say like, oh, wait, Gali, that's wrong. There are all these laws that say that the high frequency trading firms have to be fair and they have to do what's best for the customer. Well, take a look at this. In 2017, Citadel was just fined $22 million for misleading clients about pricing trades. Citadel, handling retail customer orders from other brokerage firms, essentially Robinhood, made misleading statements to them about the way it priced trades. And this was in 2017. And so, without admitting or denying the findings, Citigroup pays $22 million basically for this exact practice of not giving you the fairest order. So the firms that Robinhood is paying and partnering with and selling your orders to, I mean, Citadel is run by billionaire Ken Griffin. 2 Sigma manages $45 billion, the fanciest New York hedge fund. I mean, these are the big guys. This is Wall Street. Robinhood is taking your orders and selling them to the fat rich guys. That couldn't be more ironic. I can't think of a more ironic name. They're supposed to be stealing from the poor or stealing from the rich and giving to the poor. Instead, they're luring the poor millennial retail investors in with free trades. You're essentially getting money robbed from you just sort of behind the scenes in the way they execute the order. This is I don't know. They could be doing it perfectly. They could be executing this correctly, but I just think the incentive here is for them to not execute it at the market price because they need to make a commission. Like, why would people be paying Robinhood millions and millions of dollars for order flow if it's not profitable for them? It makes no sense. Let's think about the economics here. If Citadel is not making a lot more money on you than they're paying Robinhood, then they're going to stop paying. Why are they paying Robinhood? Why is this their favorite deal? Because they're making a killing on this. And so Robinhood's main way of making money, half the revenue, is selling your orders to massive high frequency trading hedge funds. I think this is bullshit. What's even more interesting is Baiju, one of the founders, and Vlad, they give you this beautiful story of, came from Stanford and, we were so inspired by the financial crisis and by Occupy Wall Street that we wanted to democratize finance. And so we built Robinhood. And what did they leave off their LinkedIn? What did they leave off the interesting starting story of Robinhood? Who did these guys work for before they started Robinhood? They were building software to sell the high frequency trading firms. They were building stuff to make the high frequency firms screw you even more. So they literally came from the high frequency trading firms that are now the biggest customers and partners of Robinhood. Robinhood is more in bed with the most evil, dishonest, trustful people on Wall Street than any other brokerage is. That's the bottom line. My brokerage, Vanguard, also gives me 50 free or 25 free trades a year. I don't make more trades than that because I'm boring. Say what you will. They let me trade OTC stocks, international stocks, a bunch of stuff that Robinhood doesn't have. And guess what Vanguard has? This order, this commitment in their service. They will not sell my orders and get paid to route my orders through a market maker. So even though Robinhood loves to tell you, a ton of other brokers are doing this, everybody's doing it, so it's not bad. No, that's not true. I use Vanguard, who is, I think, the industry leader and super ethical and super legit and is a huge company that I trust, and they have it in their terms of service, so easy to read. We will not reroute your equity orders to market makers. So bullshit, Robinhood. I'm using Vanguard, who offers me free trades, and they're not rerouting my orders, and they're not getting paid to route my orders, so I can get screwed. So I think Robinhood, what frustrates me about this is like, okay, this is fine. At the end of the day, maybe it's only a couple bucks a trade that you're actually paying because of this whole system. But what frustrates me is that they're just not being honest. They're not like being upfront about really they're not being upfront and they're not being transparent about the process, that they are actually making money on your trades. And so I don't like that ethos at all. I'm not a big fan of this. People are partnering with literally the biggest bullies on Wall Street. And so now you might be like, that's just half their revenue, Gali. If you go to the FAQ page of their website, you'll actually see the other ways they make money. Robinhood Gold, the first way they make money, our margin trading service, which starts at $6 a month. So, okay, you might be like, well, Gali, that's a legitimate project. They're charging a monthly fee for you to get margin for your account. What is margin? Basically debt. You have $1,000 in your account. Well, now I can pay Robinhood for a fee to where I can invest $1,500. Essentially, you're investing money you don't have. You're on margin. You're taking on debt. You're paying a fee to get access to credit. Why is this the most messed up model I could think of? Because you're incentivized to access your credit, to use all your margin because you have a sunk cost fallacy. You're like, oh crap, I already paid $50 to get all this margin this month. I better get the most out of it and use my margin. Why does this freak me out? First of all, I never trade on margin. I never take on debt. I think the dumbest move you can do is take on margin, especially if you're an early investor. My biggest rule in investing is I know how much I can lose. I'm not going to put in more money than I can lose. That's why I don't short stocks. That's why I don't go on margin. Nobody should be using margin that's starting out to be trading. You should be a professional to do margin, not some millennial who's investing for the first time who doesn't know anything about what you're doing on Robinhood. Second of all, Robinhood was only started in 2013. Nobody who has a Robinhood account has lived through a legitimate bear market. So they've never even had to go through the growing pains of knowing what a recession is like. And now you're giving them leverage with Robinhood Gold, and you're incentivized to give them leverage because that's one of the only ways you make money. And you're incentivizing them to use that leverage with this sunk cost fallacy of the subscription service. I think the incentive system here is incredibly out of whack. And I don't like that they're pushing margin to young people who don't know what they're doing. And like I saw on Reddit, there's all these screenshots of people losing like an absurd amount of money because they did margin and didn't know what the hell they were doing. Like, I just think they shouldn't be offering margin to people this simply. And so then the other way they make money, the one legitimate way, is interest from customer cash and stocks, much like a bank connects interest on cash deposits. So if you have money in your account, they're making a little bit of interest on that, investing at the risk-free rate, I guess. But even then, it's like, that can't be much. My assumption is the biggest way they're making money is A, from getting paid to route your orders to high frequency traders, or B, Robinhood Gold, which is a SaaS product to convince you to take on debt. None of those are ethical. None of those are good things for the industry. None of them are transparent about what Robinhood's motive is.